Okay, Tom. So, end of the tax year, 5 April. New tax year starts 6 April. And very quickly, people get a notification from HMRC saying, time to fill in your tax return for the previous tax year. And of course, we at Wellers, with our clients, we do the same. So that's all well and good, but many clients probably think, well, the deadline's 31 January. So why do I need to start now, be it, April, May or June?
Plenty of reasons, really, Chris. We could look at there. So, obvious one: more time you give yourself, less stress you're going to be under, less time pressure.
Sure.
Which I'm sure we all could benefit from it from sort of time to time. Giving yourself more time would obviously give you more time to plan any payments due, because you'll know what liability is due by the specified due dates. So obviously got more time to plan your finances.
So budgeting.
Yeah. Correspondingly, in the event that you've paid too much tax and are due a refund, obviously the quicker we get your tax return done, the quicker you can get that money back to you and spend it or do what you like with it. So obviously cash in hand definitely better. If we get your tax return done early, it also gives us an idea as to what your income might look like in the current tax year, potentially, based on what you had last year. And that then opens up a lot of opportunities then to tax plan in year. So it just gives us the information we need to plan your taxes and hopefully reduce down your liabilities where possible.
And that would be prior to 5 April, the following calendar year, which is the end of the tax year in question that you're talking about. Got it.
That's right. Yes. Yeah, current year. That's right. I mean, there are limited tax plan opportunities we can do with the year that's just passed, but typically most tax planning is in year.
Sure. And presumably the dangers of leaving it until January are HMRC get clogged up with lots of phone calls and queries, and that can be a bit of a backlog. And presumably as advisors, we're very busy that time of year. That does create pressure issues and planning problems.
Yeah, absolutely. Yeah. So in terms of HMRC, needless to say, January time, their helpline's a lot busier than what they normally would be. So any issues are probably going to be harder to rectify. Closer to the filing deadline. Obviously, there is the risk that leaving it to last minute, you could miss the filing deadline, which in turn is going to result in penalties and fines as well. So it's certainly a higher risk strategy, I'd say, leaving it to January and last minute, definitely.
Excellent. And anything else that you'd add to the tax return process?
So I guess the only thing to add is that getting your tax return done early doesn't make a difference in terms of when the payments are due. So the payment deadlines are always set. So if we can get your tax return done early, it won't make a difference in terms of when you've actually got to make the payment. All it means is you know what payment you've got to make. So no real reason not to get it done early rather than leave it to the last minute.
Sure, and gives you more time to set cash aside, as we said. Excellent.